Welcome to Investment Edge, your reliable source for valuable investment insights, stock recommendations, and strategies aimed at helping you achieve financial freedom. In today's video, we will dive into the realm of investment options in spot Bitcoin ETFs, especially after the recent approval from the Securities and Exchange Commission, SEC. However, it's crucial to emphasize that the information presented here is not financial advice. We kindly request you to show your support by liking this video and subscribing to our channel for weekly updates. Now, let's delve into the exciting developments. Following a hard-fought battle, investors can now easily explore spot Bitcoin funds, thanks to the recent approval from the Securities and Exchange Commission, SEC. This approval marks a significant turning point, as it signifies the green light for the first spot Bitcoin exchange-traded funds, ETFs, on U.S. exchanges. Notable entities such as Grayscale Investments, Fidelity, Invesco, BlackRock, Bank, Bitwise, HashDAX, Valkyrie, Franklin, ARK Invest, and WisdomTree, among others, have successfully overcome a prolonged legal journey to offer investors a streamlined and secure path to engage with the world's most popular cryptocurrency through ETF offerings. The recent SEC decision has paved the way for 11 spot Bitcoin ETFs to trade, featuring contributions from well-known and reputable financial institutions. Examples include Grayscale, Fidelity, Invesco, BlackRock, Bank, Bitwise, HashDAX, Valkyrie, Franklin, ARK Invest, and WisdomTree. It's important to understand what the term spot Bitcoin ETF refers to and why it's gaining significance in the investment landscape. Spot Bitcoin ETFs mirror Bitcoin's price movements, offering investors a focused and uncomplicated experience. In essence, these ETFs eliminate exposure to other assets, drawing parallels to the relationship between gold mining ETFs and spot gold ETFs. This crucial distinction provides investors with a hassle-free avenue for investment in Bitcoin. Opting for spot Bitcoin ETFs also introduces a safer path to Bitcoin investment compared to investments tied to businesses associated with Bitcoin. As we explore the dynamics of these ETFs in today's video, it's essential to stay informed and make well-informed investment decisions. Exclusively designed to track the price of Bitcoin, spot ETFs, exchange-traded funds, offer investors a strategic approach to mitigating risks commonly associated with cryptocurrency investments. These risks include the misallocation of funds, potential losses of crypto assets, and over-leveraging by crypto miners. Beyond these market risks, the regulatory environment emerges as a critical factor influencing the future landscape of Bitcoin investments. Spot ETFs bring Bitcoin into a more regulated space, addressing concerns related to security and governance. Patrick Clear, the CEO of ETF Architect, underscores the significance of regulatory oversight in instilling a sense of security among investors. This oversight ensures that fund managers are fiduciaries held to high standards, subject to inquiry and enforcement. The regulatory framework serves as an additional layer of protection against potential malpractices in the dynamic and rapidly evolving crypto landscape. In addition to creating a safer investment climate, regulatory measures act as guardrails against fraudulent crypto entities. By steering clear of deceptive firms, investors can shift their focus from concerns about the legitimacy of their chosen crypto storage to the actual performance of Bitcoin itself. Essentially, the approval of spot Bitcoin ETFs by the SEC, Securities and Exchange Commission, represents a significant stride towards establishing a more secure and accessible avenue for engaging with the world of cryptocurrency. As spot Bitcoin ETFs make their debut on the investment scene, they are poised to transform how investors interact with the largest cryptocurrency, Bitcoin. Despite Bitcoin's impressive track record against traditional benchmarks like the S&P 500 and Nasdaq 100 in the last 5 years, the world of cryptocurrencies is characterized by its inherent volatility and unpredictability. The increased demand for spot Bitcoin ETFs introduces a new dimension to the market, potentially influencing its dynamics. Currently, there are 11 spot Bitcoin ETFs actively trading on the public market, providing investors with the option to acquire individual shares or participate in a diversified portfolio. This flexibility sets spot ETFs apart from traditional ETFs that often involve juggling various stocks. The emergence of spot Bitcoin ETFs not only diversifies investment options but also offers a more straightforward and regulated pathway for investors to engage with the dynamic and evolving cryptocurrency landscape. Delving into the realm of spot Bitcoin ETFs reveals a fascinating landscape where competition among these investment vehicles may result in more favorable deals for investors in terms of management fees. Guiding us through this intriguing journey is David W., the lead analyst at Coinbits. He envisions that this heightened competition will prompt established firms to introduce low-fee options, initiating a race to the bottom on fees among newer players entering the market. In a bold move, some of these firms are even waiving fees for the initial 3 to 6 months, providing investors with a risk-free period to capitalize on potential gains. According to David W., the majority of funds are expected to maintain expense ratios below 0.3% after this trial period, signaling a shift in the fee structure landscape. Prior to the SEC's approval of spot Bitcoin ETFs, firms were diligently fine-tuning their applications, steadily lowering fees in anticipation of a surge in investments and balancing out potential revenue losses associated with fee reductions. The excitement doesn't end there. Spot Bitcoin ETFs present a smoother avenue for investors to diversify into alternative assets. While traditional investors often turn to real estate investment trusts for exposure to real estate, the regulatory framework surrounding spot Bitcoin ETFs now allows enthusiasts to directly immerse themselves in the world of Bitcoin, expanding their investment horizons. As the journey into cryptocurrency investments unfolds, all eyes are now on altcoins like Ether and Dogecoin. With whispers circulating about their potential spot ETFs, anticipation is palpable among investors. Forward-thinking firms, including BlackRock, are already making strides in this direction. According to David W., the optimism surrounding spot Ether ETFs is fueled by the SEC's green light for Bitcoin. He predicts that the agency may find it challenging to deny approval for a spot Ether product, especially considering the precedent set by the approval of both Ether futures and spot Bitcoin ETFs. Looking ahead, investors are advised to keep a keen eye on developments, as spot Ether ETFs could become a reality by late 2024 or early 2025. The evolving cryptocurrency landscape creates opportunities for other altcoins to follow suit, and staying ahead of the curve allows investors to navigate this dynamic market with confidence and foresight. Examining the response of Bitcoin to the emergence of spot ETFs provides valuable insights into the potential performance of other cryptocurrencies with similar opportunities. Cryptocurrencies that already have existing futures ETFs appear to be in a favorable position, setting the stage for a forthcoming wave of spot ETFs. Additionally, the development of spot Ether ETFs is already underway, signaling a broader trend of diverse cryptocurrency spot ETFs entering the market in the near future. With industry standards taking shape and best practices emerging, the stage is set for a rapid influx of innovative products, as highlighted by David Clear. Taking a closer look at spot Bitcoin ETFs reveals a myriad of investment choices, positioning them as a user-friendly alternative in the cryptocurrency space. While the convenience of spot ETFs is undeniable, it is essential to carefully assess the associated risks for both investment paths. Spot Bitcoin ETFs, despite being pricier, offer a streamlined investment experience compared to direct ownership of the digital asset. However, investors must be mindful of the potential pitfalls of solely relying on an ETF. When owning Bitcoin outright, custody risk becomes a prominent factor, necessitating secure management of private keys. This added responsibility introduces an extra layer of complexity and security concerns. On the flip side, opting for a spot Bitcoin ETF introduces counterparty risk, as these ETFs are integrated into the traditional financial system, subject to regulations and market forces, which pose unique challenges. Moreover, the trading landscape differs between the two options. Spot Bitcoin ETFs provide an easier trading experience, eliminating the need to open a digital wallet. Investors must carefully weigh these considerations to make informed decisions about their cryptocurrency investment strategy. As the market continues to evolve, staying abreast of emerging trends and understanding the nuanced dynamics between spot ETFs and direct asset ownership is crucial for navigating the cryptocurrency landscape with confidence. The seamless integration of ETFs into the same dashboard as stocks, bonds, and other investments offers investors unparalleled convenience. However, this convenience comes with its own set of trade-offs. Choosing to invest in a fund implies entrusting the fund manager with the responsibility of safeguarding the private key, introducing an element of trust into the management process. When investors buy shares in a spot Bitcoin ETF, they indirectly access the underlying asset without holding it directly. In contrast, owning Bitcoin outright and storing it in a wallet provides uninterrupted access, granting investors direct control over their digital assets. This method not only allows for instant access but also enhances security, providing a level of control that may be preferred by some investors. Ultimately, the decision between investing in Bitcoin directly or opting for spot Bitcoin ETFs boils down to personal preferences, risk tolerance, and investment goals. Understanding the associated risks is paramount in navigating the dynamic landscape of cryptocurrency investments. with a diverse array of 11 spot Bitcoin ETFs available for investors, now presents an opportune time to explore these funds, especially with some temporarily waived fees. The inclusion of spot Bitcoin ETFs in an investor's portfolio should be a thoughtful decision, influenced by sentiments toward Bitcoin, risk tolerance, and overarching financial goals. Bitcoin has demonstrated itself as a high-risk, high-reward asset consistently, making the choice between direct ownership and a streamlined approach via ETFs a crucial consideration for those seeking to navigate the ever-evolving world of cryptocurrency investments. As investors weigh these factors, they are encouraged to stay informed and adapt their strategies to align with the dynamic nature of the cryptocurrency market. Over the last half-decade, Bitcoin has demonstrated remarkable performance, consistently outperforming the stock market. While its success is undeniable, the volatile nature of crypto markets, marked by occasional crashes, has tested the resilience of even the most patient investors. For individuals entering retirement and prioritizing stability, exploring alternative investments becomes a prudent consideration. Bitcoin, classified as a high-risk asset, can incur significant losses during economic downturns. It's crucial to acknowledge that both Bitcoin and spot Bitcoin ETFs do not generate cash flow, potentially deterring investors with a focus on dividends. Individual investment strategies should align with personal circumstances, and the decision to invest in these assets requires careful consideration. Younger investors, still early in their careers, often embrace higher risk assets with the potential for substantial rewards. Their longer investment horizon allows for a more resilient recovery from losses compared to those on the brink of retirement. Looking ahead, investors might also contemplate potential spot ETFs for emerging cryptocurrencies. Considering the SEC's approval of Bitcoin spot ETFs, a similar path for other cryptocurrencies seems plausible. This anticipated expansion could lead to a broader market, offering more choices and opportunities. In essence, the decision to invest in spot Bitcoin ETFs involves a thoughtful evaluation of individual preferences, risk appetite, and long-term financial objectives. As the cryptocurrency landscape evolves, strategic considerations will continue to play a crucial role in navigating the dynamic world of digital asset investments. As we conclude our exploration of spot Bitcoin ETFs, if you found this journey informative, please hit the like button, subscribe, and ring the bell for more crypto insights. For additional content, check out our last video. Feel free to follow us on social media and share your thoughts below. Happy investing, and we look forward to seeing you in the next one.